Welcome back. Markets as flat as can be as we speak. The Nifty Bank is roaring away, though. That's moved to around 51,700. I'll tell you what, with all the pessimism that you're hearing, if the Nifty Bank can move to 50,000 odd mark, you're talking about the largest constitute on the Nifty that will perform. And that will be great news for the Nifty bulls, because that's what could lead us a little bit higher from here on. We know the FI is a net short, not that aggressively so, but you require someone to put their hand up and get counted. And for the time being, it's the Nifty Bank. Well, let's move on then. AU Small Finance Bank, where it delivered a strong operational set of numbers reflecting an improvement in the net interest margins. Those slippages did see a bit of a bounce up. We have Mr. Sanjay Agarwal, who's the MD and CEO of AU Small Finance, who joins us on the show. Hi, Mr. Agarwal. Good morning, and thanks a lot for speaking to us here on CNBC TV18. Well, the street likes what you have delivered in terms of a set of numbers. Give us some guidance going ahead as well. Your CDR ratio, well, that came down to, I think, 85% odd in the past quarter. So where do you see this number stabilizing at? And also on the cost of funds, I think you are guiding that it will fall by 10-15 basis points in the coming quarter. So do you believe your margins can hold at around 6% since you've just upsized your earlier guidance?
Yeah. Thank you so much for hosting me here. So I think this quarter, to be honest, is one of the quarter for us, and I'm telling you why the reasons. Like one, we crossed 1 lakh crore deposit base in this quarter itself. We crossed 1 lakh crore asset base in this quarter, and then also we applied for the universal license, right? So this quarter actually signifies one of the most important quarter in the journey of bank. And this quarter also, not only there was a growth of 12-13% in deposit, also we were able to manage our cost. Last quarter the cost was around 7.03. And we were not able to, we didn't do any kind of deposit growth in quarter one. And it was a very deliberate attempt, but quarter two, we need the money, and we grew in around 12,000 crores at a marginal cost, incremental cost of just 0.1 pips, right? So I think that helps us to really guide to the market that initially we were thinking to have a cost of around 7.2, 7.25
right.
on a yearly basis, right? But now this has helped us to really guide us, even in the range of now 7.10, 7.12 on a yearly.
Right.
So that is really has given us hope that our NIM can be protected, and that is why we are guiding that our NIM can be around 6%. And again, our asset also has grown by 9% in first half, which is close to 40% of overall guidance, and that. If you take out microfinance portfolio, then our yield on other asset also has gone up. So the both put together, I strongly believe that our NIMs can be protected.
Right. Mr. Agarwal, you want to give us the CDR ratio that you're looking at?
Of course, we are around 86%. But to be very honest, if you take refinance asset out of the calculation, because the money which we get from NABARD, SIDBI, the assets we built through that money, we can take out from the from our asset base, then our CD ratio is below 80%, right? So I'm quite confident that, the way we are building our deposit franchise, we can protect our CD ratio in the range of 80-85%.
Right. What you're saying, Mr. Agarwal, is diametrically opposite to what we heard from another NBFC management just moments ago. You are willing to let go of some bit of credit cost in pursuit of growth, whereas the earlier management said that they will not pursue growth at the cost of credit cost as well. Because
where I'm saying this, that...
because you said that your credit cost has increased from 1.1% to 1.3%, and you are looking at higher NIM as well. It will be led by higher unsecured loans. So I just wanted to understand how much is unsecured as a part of your portfolio. Go ahead, sir.
No. So let me clarify there that
yes,
our 90% book is secure.
Okay.
And that's our main franchise, which we have built over 28 years. Our wheel book is around close to 30%, which is growing in the range of 20-22%. And we want to build more wheel business because it's our bread and butter we have done over the years. The first half slippages are seasonal. You will always see like this over the years. The second half would be much better than the first half for the wheel business, MBL, SBL, affordable housing, and the gold loans. So we are not worried at all about that segment. Commercial banking has been perfectly fine in terms of growth and asset quality both. So we want to grow that business. So that constitutes of 90% of our business, right? The unsecured piece is only 10%. In that, 7.5% is microfinance. We are not growing that business at all because there are some challenges. We want to correct that course and then want to do that. And our unsecured credit card is just 3%, which is also, we have clearly said that we want to go back and learn the curve and then come back, right? And the unsecured piece is only 1%, right? And there the ROA is 3%. So I don't think that AU in historically also has gone for more growth and has compromised their asset quality. That won't be the case any time. We have to grow reasonably, sustainably, and the way the right business are being built, that's the key for us, in times to come also. Yeah.
All right. Very quickly, sir, the ROA guidance for this year, you'll do around 1.6%, and the next year you'll do 1.8%?
Oh, no. So this year, the way we are managing our NIM, and I strongly believe that we have done very well job around the other income, and of course we have saved a lot of money around OPEX. So there is some sharpness in our overall operating model for this year. So we should protect our 1.6 ROA this year. Our guidance for next year is 1.7. So it's a long way to go, but we will comment when the time will be there.
All right, take that point, Mr. Agarwal. Would have loved to have a longer conversation with you about your business, but take your promise to join us somewhere in the middle of the quarter, post-festive season. Give us a sense of how things are panning out as well. More importantly, on the demand front and also the lender, credit quality front in the MFI space too. Thank you so much for joining in. With that, we tell you another important programming note as we slip into a short break. And this is about the festive season. As we prepare to bring in the festivities this Diwali, tune into CNBC-TV18's Market Movers Forum. Today, 3 p.m. onwards on our channel itself, you have guests like Ramdev Agarwal, S. Naren, Nilesh Shah and others to help you make your portfolio prosper this Diwali.